going to start LO2 today, and inshallah, slowly and gradually we will be going towards the assignment as well. Let's start with can assess an organization's financial performance. We have done the course Financial Management Accounting as well in level 4. We have an idea what is the statement of financial position, income statement, cash flow statement. We worked on the different assignments in organizations scenario 2. So in this course as well, and specifically LO2, we are going to compare the organization, but it's not going to be like that, which was in that course. It is very easy. So let's break down the LO2, what it means. What does actually assessing a financial information performance mean? It means examining a company's financial data like the income statement, balance sheet, and cash flow, which we have already done in the previous course too. Now we are going to work on this in depth. Secondly, we have to understand its profitability. The more profit you're going to have in the business, you're going to have more reserves. You can reinvest in further projects and opportunities. Evaluate liquidity and solvency. That is, you are having enough cash in the business. It's really important. It is not mandatory that all of the time you have invested your money in the different projects. Assess how well it's managing assets, liabilities, and equity are. We have perfect knowledge for this. These three entities with the other one was, these three entities, they are really important for the whole basis of accounts. And same goes for the finance for managers course too. Make judgments about its financial health and future potential. Once you analyze the performance of an organization, then we are able to work on whether it is a profitable business or not, it needs more improvement or not, or what is the major lack in it. How we can do it? Very simple. SMEs. First, we're going to gather the financial statements, but I believe it's not all of the time easy to gather up the financial statements of the small, medium enterprise. So I'll ask the management as well, if for this part only, task 2, we can go for a multinational company or not. So we will see it as well. Income statement, that is profit and loss statement. It shows the revenue, cost, and net profit. Yes, we have cost of goods sold, we have revenue, we have expenses in it, and then we are able to conclude whether we are opting for the net loss or net profit. Then comes the balance sheet, which is the statement of financial position too. We work on it on the basis of current assets, non-current assets, liabilities, then equity, personal drawings too. Cash flow statement is all about the inflows and outflows, and we always want that inflows must be always in the double number as compared to outflows. Now, what we can do in the second step, that we can go for the profitability ratios. If you remember, we studied profitability ratio, liquidity, efficiency ratio, and right now, maybe you people have done with the assignment or doing with it, but this is what I taught earlier as well. This is going to be very easy. We just download the statements of different organization, maximum 2 to 3 at least, and then we can run different kinds of profitability ratios on it. It could be net profit margin, it could be gross profit margin, your choice. Formula is very simple, net profit divided by sales, and for the percentile, we always go for the 100. The figure, you are not going to actually work on it. Net profit is already given in the income statement, you only need to pick that up, and sales and revenue are both the substitutional words. And what it shows, the net profit margin, how much profit is made after all the expenses. Revenue less cost of goods sold, you end up with a gross profit, and then when you subtract from the expenses, we get to know whether it's a profit or a loss. And this is what is required in the task 2 as well. We have to assess different types of organizations and kinds as well, so that we can work on this. Then for the GPN, we have gross profit divided by sales. Very simple. The figures are going to be in the statement. We only need to pick up and do the calculations. And what it depicts the product, service, pricing, efficiency, whether it's going to be a good one or a bad one. Then just like that, we have liquidity ratio as well, the efficiency ratios as well. For this, we can go for the current ratio and quick asset test ratio. Quick current ratio formula is current assets divided by the liabilities, which is in your statement of financial position or the balance sheet. And it helps us to know that whether...
Ma'am, excuse me, this is for the small medium or is it for the multinational organization?
Right
My
now, I
question is
am
because they said it's like it's
telling you for
SMEs
the
you are talking
SMEs.
about.
Yeah,
Okay, ma'am.
because it's not difficult that we cannot download or assess SMEs. It is easy, but it takes a lot of courage, patience, and time. Only then we're able to do it. Ability to pay bills in the short term, obviously, we are going to know whether we have enough liquidity or not, or solvent. Then quick ratio formula is way too simple. Current asset less inventory divided by the current liabilities. Now, all these figures are already mentioned in the statement. We only need to pick it up. And it will show that you have done the work. And it tells us that more strict liquidity, no stock, that is at the back house, warehouse. Then number 3 is going to be perform the trend analysis. For the analysis, we have to compare the figures, the company's health for 2 to 3 years maximum. Then we can take out the output from it. First is revenue increasing or decreasing? We are going to get the knowledge how? From the profit and loss statement, that is the income statement. Are the profits growing? Again, income statement. Is the SME taking on more debt? Because obviously it's a small medium enterprise, but in every country the rules are different. Like in UK, when the employees hit 250, then it comes the SMEs. But in the developing nations, 250 also means a multinational. So it also there is a difference as well. Are expenses
Ma'am,
controlled?
sorry, ma'am. Ma'am, trend analysis, is it like something new or old something? Because they said perform trend analysis, which is you have to look at yourself for 2-3 years. Like, is it like about the profit margins, or it's like a liquidity ratio we're talking? Like, because they said like we have to perform the trend analysis. Is it like the basic calculation, or we are thinking
No,
what
no,
we
no,
should
no.
see
It is
ourselves?
not about the calculation. It is just simply analysis. You're going to look at different statements first for, let's say, 2020, then 2021, then 2022. Obviously, the net profit sales, they cannot be same at all. They are going to be changed. So that is where you can do the analysis. In this year, this was happening, and the second year, this was it. Whether this between the year the company progressed or regressed, that is what analysis is. This is done in the finance as well, but specifically, the analysis are for the economic subjects, for the courses, because we have to analyze different graphs. Okay, compare year over year to understand performance trends. Your question has the answer right beneath that we need to compare year over year from 2019 to 2020. What was the main difference? Whether the company did the growth or it regressed, or what was the problem? Then number 4 is going to be benchmarked with industry averages or competitors. Once we're done with your own company, you have to look upon different industries as well and your competitors and rivals too. Like we can go with SMEs in the same sector, for example, tech, food, retail. I chose a coffee shop. So I can compare another coffee shop with mine, which I concluded for the course. That is, you do the analysis. The local or regional average SME performance, for example, SME authority, KFT or banks. Now what it is, where they have the major authority over these sectors. It could be any of your choice, whatever you want to select. This helps judge with the SMEs, which is ahead or behind the competitors, because all the SMEs are not at the same level or ground. Few are going ahead and few are literally they are the startup position. So we can literally, after doing the trend analysis, conclude everything better. Then in the step 5, we have to go for the summary assessment. It's just an example. It is very small. Obviously, when you are going to do it or the people are going to do it, it's going to be in depth. Like for example, it's Azayana's honey product in Jalta, specifically in the dates and everything. Here it's going to be 2023. You can choose any. Now this is not the real one, okay? This is just a make up. The company is same, but the figures are not correct. Revenue is 1,200,000 Saudi Riyal. Net profit margin was 15% in year 2023. Ratio was 1.6 and debt to equity ratio was 0.3. The one which I just demonstrated right now, these two ratios, profitability and the liquidity, once you will be calculating it, you can just directly write the figure. I wrote it in this example. It's going to tell that what actually it is all about. Then cash flow, it's going to be positive, and it is positive as well. That is 120,000 Riyal. And it's not all the time the same. It can be net loss too. That is more outflow, less inflow. So the conclusion is Zion's honey is profitable, liquid, and low risk. We are doing what? Now the analysis of the work which we did right now. It should consider reinvesting profits for growth or seeking a bank loan if expansion is planned as well. If they really want to grow into another city, then they could go for this. So this was the actually breakdown of your LO2, what we're going to learn in this complete LO2 in different assessment criteria. Now from here, your 2.1 starts. Let me just write the names. 2.1 states compare the financial statements of different types of organization. First, you need to focus on the command verb. Whenever it comes, the compare word, it means specifically to work on similarities and differences. It doesn't mean we're not going to explain any term or terminology. We are going to explain it. But with that, we have to work on the similarities and differences too. And here we need to do what? The financial statements of different types of organization. Types of organization. We have sole trader, we have partnership, we have small medium enterprise, we have multinationals, we have public limited company, limited companies, private limited companies. There's so many companies and its types. You can just figure out few which is in your indicative content, and then we can work on its statements. Okay. Compare means examine the subjects in detail, looking at the similarities and differences just demonstrated right now. Financial statements are the formal records that reflect the financial activities and position of a business, asset, liabilities, and equities. What actually is going on in the business, we're going to work on that. Different types of organization like sole traders, partnerships, private limited companies, I'm giving you the definitions as well in the next slide, and public limited companies produce different sets and formats of financial statements, because an SME cannot produce a statement like an MNC. It's impossible. So that is going to be different depending on their structure, size, and legal requirements. So on these three bases, we actually do the configuration of the sizes as well of different types of organization. This assessment criteria compares the financial statement of these organizations using real examples where possible from the SMEs in Saudi Arabia. The statements, the types of statements, and the purpose of it. Income statement, that is the profit and loss one, the previously known as this. It shows what? The revenue, then the cost of goods sold, and we're able to find out the gross profit. Once done with the GP, we less the expenses and we're able to conclude whether it's going to be profit or a loss. Statement of financial position or the balance sheet. It is all about assets, liabilities, and owner's equity and its types. Debtors, current assets, non-current assets, drawings, liabilities, payables, and so on. Cash flow statement specifically working on the inflow and outflow, and we always want that inflows must be in double the number. Notes to financial statements. Calculations are just numbers in the statements. You have already worked in level 4 on this course. But what we do, we need an explanation for those, how you did it, like extra working, what was the conclusion, what was your analysis. That is known as notes to financial statements, which we just read right now from income to cash flow. It provides detailed context to the numbers in statements, what actually it means, whether it went with the positive ratio or not. Chairperson's report, mostly the head entrepreneur. It discusses the company's vision, performance, and strategy. Public limited companies only, because we have to go for the annual general meeting every year. So all the board of directors and board members, they gather in the meeting, every worker is there, and the shareholders too, and we discuss what's the performance of the company and so on. Auditor's report, who is actually doing the double cross-checking of each and every figure, is an independent opinion on the truth, fairness of the accounts public limited company only. Whether the calculations, whether the statements, they are proof from any ambiguity or any problems, or there has been some hyped figure in it. Now, let's start with it. Financial statements by the organization type. The first is the sole trader, and the example could be Lally Perfumes Real. Statements produced, we are going to work on income statement and the balance sheet. Internally, that is for the organization only, not outside. Why? Because SMEs cannot list their stocks at the stock exchange. You need to be first public, and then we can able to list ourselves at the stock exchange and people can buy. Explanation not required by law to publish accounts. Obviously, you are SME, that is why. Simple records mainly used for the tax and internal planning. That is for the company's well and being. You're going to produce different statements so that you know where you are standing. Strengths, the positive parts, easy to prepare. Yes, it is, because for the SMEs, it is going to be on the monthly basis too. It's for the big companies too, but for SMEs, the numbers, the varieties of expenses, they're quite less. Low cost, because you don't need an extra cost to hire even an auditor too. No external audits required. Weakness is lack of transparency. Why it's a weakness? There is no translucent, there is no opaqueness. Hard to attract investors, it is really difficult because in the end, the dream is to become an MNC. You want to be an international business. But for that, we need to do some work. Only then you're able to show the investors that you have the potential, and then they are going to be convinced to invest in your business. Partnership. For example, Al Noor Dental Clinic in Jeddah. Statements we are going to work on: 3, income statement, profit sharing accounts, what do we call it? We work on the bad debts and good debts in it. Capital accounts for each partner. Which partner, XYZ, because it's a partnership, is going to invest more. The more you invest, the more backup the revenue you're going to get, the profit actually. Strengths are more structured than sole trader because you're not only one now. You're going to be 2 or more than 20. Shows how profit is shared among the partners. If there is a loss, the loss is going to be shared among all the partners. And if there is a profit, you're going to get the profit as well at the same ratios. Strengths are done. Weaknesses still not required to publish. Again, you are a partnership, no need to go for it. Remain in the family. Potential disputes over profit sharing, yes, because the more investment you do, you're the liable person to get the return as well. No separate legal identity. You are not alone. If one is taking a decision, you're going to get into it like that. There is only agreement or disagreement over a decision over a policy. Then we have the private limited companies, for example, Zaina Honey Limited, Saudi SME. The statements we are going to work is going to be 4: income, statement of financial position, notes to the account, both, and statement of changes in equity, optional. This is for the owner's equity to know whether he has invested a lot or not. Explanation is required by the law to maintain formal records because this can be a family business as well. And slowly and gradually, you are not working in one city. You're operating in different cities of one country. Then may need to file accounts with authorities if large enough. If you're growing, again, opening up your branches in different cities, then your bank account is going to be enormous. The taxations is going to be enormous too. Spends legally separate from the owners. The one who is the what do we call entrepreneur is going to have different share, and the one which have invested, they are going to have different. Easier to attract loans because already people know that you are going to survive no matter what. Financial data more structured, that is all the statements, they are made properly. However, preparation is time consuming. It takes time, it takes patience for each and every step which we opt in the SMEs. It is costly because we requires accountant. When the government intervenes, we have to hire the external auditors too. Limited external transparency, not published unless required. If the business grows into many branches, then we can think of listing at the stock exchange, but the shares amount is going to be bilingual. It's not going to be like all the time flowers and blooming. It's going to be really difficult. Then we have the big one, the public limited company, for example, Al Marai, though it's an SME, but it's a public limited company because they're not having in this branch in one country. We're having in the United Arab Emirates too. Then we have in the case all cities. Now for this, the annual report includes lots of chunks. Income statement, financial position, flow statement, then notes all to these 3 statements, auditor's report, chairperson's report, accounting policies, and segment analysis because Almarai's shares are traded at the stock exchange. Like at the current, there is a war going on. such a high depiction. So the stock prices, they are getting really low. And the one who really know how to, you know, tackle up all the monies and the investment, they're in buying and buying the shares, because once everything gets okay for a while, even the stock prices are going to stock up. They will be really high. Same goes for the gold. At the moment, gold rate is really, really less. It's decreasing day by day just for the war. And once it is all done, the budget is going to come, it will boost up. Strength. High transparency, because you have to show your accounts to the public. Investor confidence, it's really easy to gain their confidence, because an investor, for example, I want to invest in the Malay company. I know their statements, their positions from the past 5 years. I'm going to run a trend analysis on it, that whether they have only growth or not. Then I'm going to invest huge chunks into this business. Audited and verified. Definitely, we have to hire them and they check and everything double. Required disclosures. That is, call it explanation to each and every verdict. However, costly to prepare an audit. It's a big company, it takes time and it takes expense too. With that, strategic information to competitors. Now, you're not alone here. The competitor of Almarai is Nadik, and we need to go side by side. Heavily regulated. Regulated with what? Rules and regulations, taxes by the government. Comparison internal versus published financial statement. We have a spec, that is the depiction. With that, we have internal, sole trader or SME limited company, and published public limited companies. Disclosure level. For the internal sole trader SME limited companies, it is very low, because we're accountable to the government, to the authority. But the chances of being listed at the stock exchange is very less. However, if we compare it with the published accounts, public company, MNCs, it is very high. It's actually mandatory and obligation. You need to stock up yourself at the stock exchange. List up yourself at the stock exchange. Audience, specifically the party who is going to be affected by it. For the sole trader and SME, owners, managers, tax authorities. Whereas for the public limited companies, we're going to offer the public, shareholders, and regulators. We cannot name the consumers here. They're going to be public, because in public, everybody is involved and they can buy the shares. Complexity. For the internal one, it's really basic. But for the big companies, it is highly detailed. For each and every calculation, you need to give the reasonings. Audit requirement, not necessary for the sole trader or the SME, whereas for the public limited company, it is mandatory. Then cash flow statement, optional for the SMEs and mandatory, and it's required as well for the published account. Then directors share report. Obviously, we're not going to hold AGMs in the SMEs, but yes, for the public limited company, it is required. Cost of preparation of what? Of the statements, it's really less. And for the published, it is really high. So it's a kind of what? A proper comparison between their small things which are used in different types of organization and how we figure it out. Then comes comparing the financial statements, specifically the, you can say, crux of similarities and differences. Sole traders, simple internal accounts are needed, that is income and expense, not to go for in-depth, simple. They're not legally required to publish. There is no need to go for published accounts, because there is absolutely no hassle to go for it. Used mainly for the tax and personal decision. The one statements which we make in the SMEs, specifically sole traders, like small bakala shops, small shops, or 1 or 2 persons are working there, they do it for just for the tax, because we have to pay the taxes. Partnerships, where 2 or 20 people can join, and more than that too. Similar to sole traders, but include partner capital and profit sharing details. The more investment you're going to do, that is going to be the capital of the partners, A, B, C, and the profit sharing also depends on it. But when the loss comes, it is shared equally by everyone. Not required to publish formally, no need. Used for the internal and tax purposes, again, just for your own sake. Then come, private limited companies, more structured income statement, balance sheet, and sometimes the notes as well, and the cash flow too. With that, we need to audit the statements based on the size of what of your statements, not usually public, but must meet the legal standards, which are by the obligations, regulations by the government. With the public limited companies, it says must publish full annual reports. Like after every 30th, on the 30th December, we publish these accounts, income statement, or between the months too, but that is not published publicly. It is only for the business or for the internal purpose. Income statement, balance sheet, cash flow, note, director, and auditor reports. Required by law for the investor transparency. They need it, they required every depth of it, how you achieve the numbers and the calculations and the profits and the loss, because they need to figure it out in depth. Highly regulated and detailed by the government, obviously, we have to follow all the rules and regulations, abide by them. Then we have the key differences, the sole differences. Formality. Sole traders and partnerships are informal, yes, because they're doing everything for themselves and making the public happy, whereas the limited and the public limited companies are formal and structured. Not all the limited companies, but maximum are structured. Disclosure, giving the explanation to each and everything. Only public limited company must publish public reports. Reports with the statements, reports are the separate things. Working on the in-depth insights of each and every calculation, how we achieved it, what was the phenomenon at the back. Complexity increases from the sole trader, yes. Slowly and gradually, even the sole trader, they face the problem. Then go ahead with the partnership, limited company, public limited company. This is the whole cycle in the organization types. Users, the one which actually get benefits of it. For the internal users, we are opting for the sole and partnerships. And for the public, we go for the public limited companies, the investors, the regulators, the brokers. For SMEs like Zaina Honey Limited for Dalali or perfumes, preparing simplified internal financial statements. See this example which I showed you. It was not in depth. It was really small and not really complex. But we work on the big companies, things get really difficult. And once you select the organization, this chart is going to help you. Like for the sole trader, if you opt for the sole traders and SMEs in your case, then obviously disclosure level is low. These things are going to help you, the chart. However, the business grows and seeks external funding like from the banks or angel investors, the brokers. Adopting more formal and structured statements improves credibility and financial discipline. Once you feel like you need more investment, more loan, then we can always ask from these authorities because they definitely help us out. Microfinance bank too. The format and the complexity of the financial statements depend on the business type and its regulatory obligations. As I just demonstrated for the public, it is actually different and we require everything, but you compare it with the sole trader, there is no mandation at all. Sole traders and partnerships operate informally, while the limited companies and the public, they follow structured reporting. For SMEs in Saudi, adopting the best practices from the larger organizations without incurring heavy cost can be a strategic advantage when scaling up or seeking the finance. Because what we really want, we want to invest less and want to get the fruit more and more. That is the phenomenon of every business, the mindset of every business. In depth, these are the similarities of all types of the businesses, the organizations. Then we have detailed differences as well for the sole trader, partnership, private, and public. Legal status, because on the lecture side, things are quite less. But when you work on the document, you can work the way you want. Then example comparisons too, I did that as well, just to make sure how you will be doing it. And a conclusion as well, summary key differences, just break it down. For the sole partnership, for the limited public company formality reporting, these are the category. We can work on the category wise as well. Like for the formality, if I work on the sole partnership, it is informal, internal. We just studied it right now. But for the public, it is formal, structured, and regulated. When we come for the reporting obligation, internal or tax only, the sole traderships or the partnership, because they don't want me to directly go with the government. But for the limited company, it is mandatory because we have to work with the authorities and the shareholders too. Complexity. Sole traders are way too basic. But the public limited company, they have to go for the higher thing because it serves the broader strategic and legal needs, country to country. Use of cash flow statement, you can opt if you want for the partnership sole trader, but for the limited and the public, it is necessary. Public disclosure, no need to go for the sole traders, but for the limited, it is required. So it was the crux, but above, it's in the detail, the differences and the similarities, and these are the final judgments. Uh, Sole traded partnership, best suited to simple, cost-effective financial reporting, ideal for the personal control and limited external accountability. Few business, you have seen that family business, they really don't want extra person should add in up. The brothers, the sisters, they only run that small family business and they're happy with it. Private limited companies, balance between the control and formality. Appropriate for the SMEs aiming to grow, seek investment or the loans. Because first, Al Mare was a small color shop. Then slowly and gradually, they are now big SME. Public limited company, a private limited company actually, require full disclosure due to the public investments. Public companies actually run from the investments of the people who invest in them. They could be the brokers, they could be the investors, they could be the general public. For the large scale enterprises with the complex financial activities, and once they gain huge chunks of profit, that is distributed as the dividend, ordinary and preferred, different types of dividends among those shareholders.